I am a beautiful black princess.
And I'm the real Donald Trump. Jay Powell is getting fired. Tariffs on China will end. Egg Foo Young will be cheap once again. The SPY yesterday continued its bearishness, guys. It continued its bearishness. Once again, breaking down the support of the mother candle's low. You guys see here, the mother candle was from last Wednesday. Last Thursday's candle was inside the range of last Wednesday's candle. Yesterday, we broke it down, and I mentioned that we had a support level at 520. I wrote it in the Discord as well. The critical 520 level is testing once again. And from here, bulls must clear 521.5 and 523 to trigger calls and put those higher targets in play. Why? I only trust bounces from support when it can clear some resistant levels. And then I wrote here, if 520 fails, 518, 516 and lower levels would be in play. Be ready to react. And then what happened on the 15-minute chart, guys? Boom, right there. That green line that you guys are seeing right there is the 520 level. I take levels from the daily chart and I put it onto the 15-minute chart so that I can trade it intraday. Broke down on the 15-minute chart, and what happened? Broke it down. I wrote here 520 failed here, put in 518 or lower in play. Alerted the group. We got the breakdown. What do we do when we break down support? When price action break down support, that's when you want to look for puts. Doesn't always work, but it works more than it doesn't. And yesterday it worked beautifully. Beautifully. Okay, I had a 521.5-ish level. It rejected around that area. Broke down 520. And what was the low? 508.46-ish, right around there. Holy moly donut shop. And then we had like a bounce in the power hour. Holy moly donut shop. It was a beautiful drop to the downside. Now, as awesome as yesterday was, we got to move forward on to the next setup. And you guys can see on this 15-minute chart that it was the breakdown of 520, which is also on the daily chart, the mother candle's low. That's a critical level, 520. So bears must defend that level. We're trying to gap up right now. It could be back testing. You guys know sometimes when we break down support, price like to back test it to change its role. It will support, break it down, and wants to turn it into resistant. And if successful, that is bearish. So what am I saying? I'm saying that below 520, I would remain bearish, okay? And when do we trust rejections from resistant? When it can break down support level. I have support at 518, 516, which looks like a gap around there in the pre-market. 516 fails, that would put 514, 512, 510, and 508-ish all back in play. The bottom line is stay bearish below 520. Okay, now if we are to get a bounce, obviously we need to recapture 520. Okay, this was the sell zone yesterday that triggered a big drop to the downside. So boldly to get back above 520 to cancel that sell zone, but also a recapture of 520 would invalidate the bearish setup that we have on the daily chart, because we have the inside candle setup and we broke it down bearishly when we broke down 520. So if we recapture 520, that would invalidate this bearish setup, giving us that false breakdown setup, putting 523 in play first. That's a fib level. And if we can clear and recapture 520, we can pop up higher. 525, 526.5 for the gap fill, or higher would be in play. 530, 533 or higher. But it would start with the recapture of 520 and 523. Remember, recapturing 520 invalidates the bearish setup, and recapturing 523 would recapture a fib level that should give us more upside. Okay, so summary, that is 520 is the equilibrium level. Above it, we can possibly get a bounce, but below it, more downside is possible. Triple Q, very nice day. I talked about that 439 level. Below it, we want to stay bearish. Above it, a bounce was possible. Well, we was below it, broke down 437.7-ish level, and it gave us a nice drop to the downside. We are gapping up, testing that area right now. 437.7 was based on the mother candle's low. So recapturing that level would invalidate that bearish setup. So 437.7 and then 439 is a fib level. Those levels must recapture if bulls want to get a bounce going or even fill the gap, which is around 444-ish. All right, around there. Okay. Now, if we are to stay bearish, 437.7 and 439 highest must hold as resistant. And we trust the rejection here when 436, 433, and 430 can fail as support. Those levels fail, then more downside incoming. And based on the way the Bollinger Band is, there's definitely more room to head down. NVDA continues to be bearish. And it broke down some fib levels. As of right now, it's testing a fib level around 97.8-ish. If we are to get bullish, staying above 97.8 would be a good start, but it would need to recapture and clear 99 and 100.5 sell zone. All right, if we can clear it, 102, 103.5, and 105 plus would be back in play. But if we're below 97.8, and I have support at 90, well, I'm gonna go with 96 and 94 today. If those levels fail, 92, 90.5, and 89 or lower incoming. The bottom line is below 97.8. We are bearish, okay? 99 highest, all right? Moving on to Tesla. Tesla also ended the inside candle setup bearishly. 233 is a very critical level. 235 highest. As long as below, stay bearish, all right? From here, I have next support at 228.5, 227, 225 and 223. If those levels fail, more downside incoming. 220, 217, and possibly down to 213-ish area in play. Trust no bounce unless 230, 233, and 235 can recapture to put 238, 240 or higher back in play, guys. Remember Uncle's trading philosophy. Know the levels beforehand. Know the setups beforehand, and once the setups reveal themselves, you react to it in real time, unbiasedly, like a sheep. Coin is chopping, unfortunately. All right, coin is chopping, but definitely watch that 176 level. Below, we can get a drop to the downside. It'll have to take out 175, and because that's around where the 5 DMA is. Well, it's actually around 174.8. All right, so around 174.8, and then I'll be watching a 173 level and 171.3 level. That's a fib level with 170 and 168 below. So to be bearish, I would definitely need to see below 174.8 and 173. That would definitely be a great sign of bearishness. Below 171.3 would take out the buy zone. It's been a tough buy zone these last couple of days, so breaking it down would definitely be good signs to enter puts. If we are to get bullish, I need to see, well, it's above 176 right now, so that's a good start. Next resistance at 177.5 and 179. If those levels can clear, I would definitely trust some more upside. And I really do think we can go hit 184, and there is a gap fill around the 185, well, actually 188.5, excuse me. Right around that 188.5-ish area for the gap fill. All right, guys. Here is the VIX. Moving pretty weak there. I love it when the VIX is volatile. A good sign for sheep-style traders. Right now, it's not too high, but levels are the same. I'll be watching. I think it's a chop range 31.4 to 36.4. I mean, if we can break that chop range, I think we can get a clearer direction of what's next. I do think we can bounce higher if 31.4 can hold, but if it doesn't, I'll switch my, thinking, and I would favor more downside. 28.2 or lower would be incoming. All right, guys. So that's my morning video for today. Thank you guys so much for watching. I appreciate y'all. Love y'all. Remember, we are sheep-style traders. That means we trade unbiasedly, and we are money magnets. Let's go.